Hello, savvy investors. Okay, let's go through random entries into my journal. Into my journal. I have a chart here that has some ultra high yielders. And among my ultra high yielders, UTG is no UTG actually has a yield higher than Main Street Capital. Main Street Capital has a yield in the 7% range, and UTG, which is a closed-end fund, it's a Reeves utility, I believe, closed-end funds. Um, that has a yield of 7.6. Now, do not make chasing ultra high yield stocks or securities your primary purpose unless you are already in retirement, because you will sacrifice total return. Um, you don't want to sacrifice total return, especially if you are 10, 15, 20 years away from retirement. What do I mean by that? When you focus on ultra high yielders, you might have a yield that gives you 7.6%, for example, with UTG. That's a ticker symbol. UTG. Now, that 7.6% yield that it's paying you, you could add on maybe a 2, maybe a 3% growth in terms of the appreciation of the underlying security, the closed end fund itself. Oh, talking about closed end funds, it's also very important for you to buy it when it is trading below the intrinsic value, below the net asset value of the uh, the assets that the closed end fund holds. You take a look at take a look at Reynolds, for example. Not Reynolds. Brookfield Asset. Why did I say Reynolds? RA. Brookfield Asset. Ticker symbol is RA. Brookfield Real Asset. The yield on that is 13.3. That is incredible. That is phenomenal. I mean, you really want a portion of your ultra high yield segment of your portfolio to be capturing this incredible yield. KKR have a business development arm, a BDC. BDC. KKR has one. The ticker symbol is FSK, and that's yielding 13.3%. Ares. Ares is another very popular business development firm. The ticker symbol is ARCC. That's yielding 9.7%. So we're just looking at a few. Oh, how could we forget about JEPI? JP Morgan's equity premium ETF. The ticker symbol is JEPI. You look at JEPI, and JEPI has what, a 10.6. I need to cross check that. I thought it was much higher. I thought it was much higher than that. So Um, there you have it. You have JEPI. Did I mention BST? That's BlackRock's Science and Technology Closed End Fund. That has a 9.5% yield. So, what am I saying? You don't want ultra high yielders to constitute more than 15 to 20% of your portfolio. I mean, that is for an individual that is looking at retirement in 5 years, right? We also have mid cap value ETFs. We have REITs. We have small cap value ETF. We purchased Avantis US small cap ETF in my wife's portfolio, and we're using that. The way I've built our portfolio, uh, my wife's portfolio is skewed towards the value, and mine is skewed towards small cap with some dividends kicked in there. And the bulk of my stuff is in the indexes, the large cap index, the Russell 1000, the Russell 2000, the international indexes. Anyway, so that's just my rambling. Oh, here's this AFG, American Financial Group, AFG. Shh, don't tell anyone. That is one of the stocks that pays a huge special dividend, but most screeners don't show you that. So, in addition to all this, Blackstone, a quality stock, ticker symbol BX, will soon enter this list of ultra high yielders, but it's an accidental. It is an accidental high yielder. I have had enough coffee for today. It is an accidental high yielder because the stock price is really nosediving. So, my friends, uh, oh, here's a note I made to myself about Ronald Reed. As I accumulate this, I I need some motivation. I need a reminder of people who have succeeded doing something very similar to what I am doing. Iron sharpens iron, right? So one man sharpens another. Who is sharpening you when it comes to your investment journey or your investing journey? And who are you sharpening? So there's a note to myself that Ronald Reed owned 95 stocks, and that's at the bottom of the page there. What's on page two? Page two is Ray Dalio's buys. Ray Dalio is buying Johnson and Johnson, Visa, Mondelez, Google, and Microsoft. We just bought Google and Johnson, and I feel bad because my limit order into Google was at $100 and $98. I'm being honest with you. I should have put the limit order in closer to Google's 52-week low, which I think was about $88 or $89, somewhere in that price range. Anyway, being totally honest, here's another note I made to myself about the importance of an emergency fund. As an investor, you don't want to use your investment portfolio as your emergency fund. And when it comes to emergency funds, I take my hat off to Mr. Dave Ramsey. He is the guru of personal finance, especially when it comes to discipline required to create a budget and establish to build up your emergency fund. To establish an emergency fund, you need to know what your core living expenses amount to on a monthly basis. How much do you spend on a monthly basis? And then you multiply it by 3, and you will have a 3-month emergency fund. Then you say, how long will it take me to arrive at a 3-month emergency fund? If I'm saving $500 a month, if I'm saving $200 a month, how long will it take me to get here? If I really discipline myself and I decide to go all in for this, how long, if I save $1,000 a month or $1,500 a month or 2,000, what works in your world, right? What works in your world? How long will it take me to get to 3 months of an emergency fund? How long will it take me to get to 6 months of an emergency fund? And I have right here 9 months of an emergency fund, exclamation mark, exclamation mark, exclamation mark. Have a wonderful day, my friends. You can achieve your investing and financial goals.